In today's video, we'll be taking a deep dive look into Palantir. Now the stock only IPO'd about 2.5 months ago at the end of September, and when it did, it was around a price of $9. Just recently, at the end of November, we saw a peak in the high $33 range. That means that this stock ran almost 400% over the course of about 8 weeks. So I'll look at this entire price history and let you know what I think is going to happen with the price next. Are we headed upwards and going to put in even new highs? Or maybe we're going to pull back and correct this 400% move that we've had so far. So let's dive right into the chart. Now, if you've watched any of my past videos, you know that I like to start off with just simple support and resistance on my charts as the very first thing I do. Right now, this is a clean chart, so let's go ahead and add some support and resistance lines to this. We're just going to note the important peaks and valleys in our charts and use our horizontal ray tool on TradingView here to mark these levels. We know that if these levels come back and the price ends up coming down to these levels or back up to the levels for ones that are higher than the current price, that there's going to be a lot of buyers and sellers at those levels, and we might hang out at those levels or even bounce off of them. So let's start drawing some of those into the chart. Just starting all the way from the left here where we IPO'd, you can see that this first resistance here around $10.45 was pretty strong all throughout the first couple days of October here, and even when we started to push a little bit above it into the $11 range, we did hover this line for a while, so that's going to be a strong support and resistance line. As we started heading upwards in early November, this line somewhere in here ended up catching a couple of these moves pretty nicely. This pullback through here, this one through here, and then this one through here as well. And if I just zoom in, you can see that a little bit better. So this is the wick that we're drawing it off of, and basically this pullback caught the same move, and same with this one. Small wicks below this line, but in general, our support and resistance line is right around this area. And then as we're trying to break out, it looks like this $19 level in here was pretty strong resistance before we really exploded upwards. So again, just zooming into this price territory, you can see we headed upwards and got rejected by it here. Here we tried to break out, maybe a little fake breakout, a little bull trap maybe. People were probably buying this breakout here, expecting the price to go upwards, and quickly got stopped out as we dropped below. And then finally, once we did actually break above it and have a good confirmation of breaking above it, that's when the price really started to rally. Now on this price movement up from November 23rd here to November 27th, we pretty much found no resistance in this area at all. There were very few pullbacks, so I'm just going to put a resistance line at the very peak here, maybe on this wick up here, but I actually like this triple wick right in here. Again, zooming in, you can see that 3 of these wicks came right around this line right here. We can pull it down to catch all 3 of those. We could draw another resistance at the top up there, and actually by looking at it here, it looks like it is about $2 above, so let's go ahead and put one more line up there as well. And then finally, as we started to come down, some more support levels were established for us. So it looks like maybe right around where price is hovering right now, this is a good support level as well. We supported it through this little bounce in here. Each of these pullbacks, we did end up coming below it on this large red candle right in here, but then we hovered around it, broke a little bit above, broke below, and that's when a huge pullback came as well. So again, really strong support and resistance line in there. And then where the bottom of this huge pullback was from 33 down to 21, this is of course going to be another strong support in here. And it looks like we got another one of them right around here, resistance on the way up here, and then supported on the way back down. Exactly what you like to see out of these lines. And then I'll put in one last level to catch kind of this resistance through here and through here as well. And it looks like somewhere around right there would be good. So if we just zoom back out and have the whole price history on this chart, you can see these are the levels that Palantir is kind of moving in between. They've been really strong support and resistance lines on both ends of the market, and you can see we're actually hovering around one of those levels right now after bouncing off of the one below it. So if you're a beginner trader and you don't really want to focus too much more on different technical analysis techniques, or you want to start with something simple, which is something I would highly recommend you do, this right here is a really good first step. If you can draw these support and resistance lines on your chart, you can actually trade 100% based off of these, along with just maybe looking at the candles or the volume or anything small like that, and taking trades based off of it. If what I've done so far has been complicated, I do have a series called Technical Analysis 101, and I'll link it in the top right corner right now. I would highly recommend you watch that, as it'll help you get to the point where identifying these support and resistances and understanding what you're actually looking at with these candles will become second nature to you. So again, if you're just trading based off these support and resistance lines in here, we're hovering at one of them right now. You could take a long or a short trade right here, depending on whatever your bias is, and target the next support and resistance line. Now, I'd probably wait for some sort of confirmation one way or the other, but let's say we got a candle that ended up breaking above this support line here with pretty strong volume, a green candle in here that maybe moved us up 30 or 40 cents. At that point, you could enter a long position. Let's say it's all the way up here around 27.5. You could put your stop below this strong support and resistance line that we've drawn, maybe below some of these wicks as well inside of here, so maybe somewhere around here, down at 26.7, and then target that next line right up there, or even target the one after that. You could take half profit here and half profit here. And you can see, just looking at the risk reward of this top one would be about a 5-to-1 risk to reward, which is a really good trade setup. You could do the exact same thing on the short side if the next candle we have that's strong and confident ends up being downwards, where you'd take a short position with a stop above some of these wicks up here, maybe around where our entry currently is, and then targeting down here at 25.14 or even all the way down at 21.70 here. But anyways, let's actually take a look at this and put more technical analysis on this and see if we can get a better gauge of which direction we think the market is heading. But before we continue forward, I do want to just give you a reminder, if you like this video and want to see more similar content, do me a quick favor, click the like button below and hit subscribe for future similar content. All of the channel posted on this page will be very similar to this one, so if you like this video, I promise you'll like the other content too. And this really does help me out a ton. Anyways, diving back into our technical analysis. Typically when I'm trying to figure out long-term trends or direction in the market, my favorite thing to use is called Elliott wave theory. And once again, I have an entire playlist telling you and teaching you about Elliott wave theory, so if you want to learn more, I'd highly recommend you go check that out. Essentially, Elliott wave theory states that the market trends in 5s and corrects in 3s, and these are trending in what's known as waves. Now before I dive too deep into this, I'm just going to say that I'm actually not going to use Elliott wave theory in this chart because I don't think we have quite enough data. This only IPO'd about 8 to 10 weeks ago, and there really hasn't been too many peaks and valleys in the chart so far, so getting a reliable Elliott wave count on this so far is going to be very tricky on a zoomed out scale here. So instead, I'm going to use some other tools and techniques such as Fibonacci Retracements and Extensions, as well as Pitchforks to help us frame the geometry of the market. So one of the very first things I'm going to do is use a Fibonacci retracement. I'm going to click on it here in TradingView, and I'm going to click at the very bottom pivot on our chart, which seems to be all the way down here at about 884, the very low that we've seen. And then I'm going to click at the very top, up here at that 33.50 mark that we drew before. Now what these values are telling you is how much we've actually retraced from where we've pulled. So we pulled from the very bottom to the very top. This red line here will be 50% retracement or a 50% pullback of the entire move so far. And this red line is actually an extremely common spot for any major Fibonacci retracements to pull to. That level, along with the one right below, this golden line, which I have as the 0.618 or a 61.8% retracement, are my two favorite spots to buy in a long position. Now, if we just look at that red line and where our price came down to before, I'll zoom into that. You can see it's actually perfectly to that red line, almost to the penny, maybe one single penny below that red line. And that's probably just due to some human errors here of me not putting this Fibonacci retracement on exactly, or maybe it just was 1 penny off. Either way, it's extremely close and obviously not a coincidence. Even if we just look at the big pullback before the one that came down to the 50, you can see that this candle right here came right to that 382, this blue 38.2% retracement almost perfectly as well. Maybe a single penny or 2 pennies off of that. So it should be pretty clear that this Fibonacci retracement pull that I have on the chart here is extremely significant. Now when I use Fibonacci retracements, I look to put negative values on these as well. And you can see that with the values that are above where we clicked here. So this green line is the first negative value, and it's the negative 0.236, or the negative 23.6%. Now this is basically just derived by taking the value from the top down to the 236 here, and then flipping it onto itself. So if I grab that distance here and just put it on top instead of below, you can see that's exactly where a green line falls. And I like to use this green line as a target for when we start heading back upwards, especially if we do come down to that 0.5, that red 50%, or that 0.618, that golden 61.8%. This is an extremely common and awesome trade to take that I see successful very often, buying off this red 0.5 and targeting that green negative 0.236. In other words, this Fibonacci retracement pull right here is targeting about $39.28 on Palantir. I'm going to put our first box up there as one of our potential targets so that I can clean this off of my chart and keep going forward. So let's do the same exact thing, but on a smaller scale. So we pulled from the very bottom to the very top. Let's use this next move that we most recently had. So this little bottom right in here, up to this top right in here, and pull that one sideways. I'll expand the chart here so you can see those levels a bit better with this price action. And you can see we came almost perfectly to that 618, that golden line on this pull right here. If I just zoom in, you can see once again, we're maybe 10 to 12 cents off of this golden line with this wick right in here. So once again, a very significant Fibonacci retracement pull. And if you look at the other levels, they are pretty good support and resistance all throughout all of this price action as well, with our wick on this 38 and all of this price supporting this 50 in here. So without repeating myself too much, I told you buying at this red or golden line and targeting that green line is an awesome trade to take. So let's just draw that in on this smaller scale here, which would be targeting 33.65. So let's draw our second target box right at that level. Now the other thing to keep in mind is that these Fibonacci retracements, pulls, and targets all go on the bearish side as well. So let me show you an example of that. I'll pull a Fibonacci retracement from the very peak of this move right here to the bottom of our pullback and pull that one sideways. Now you can actually see that when we came up to these levels, this 38 was pretty good support and resistance through here, and the 50 ended up being resistance for a little bit in here, but we actually shot through both of the levels that I would like to take a trade on, a short position. So you could have entered a short position at both of these spots, just like I had just pointed out, targeting way lower on Palantir. But when you're taking those trades, if we break above this yellow line, or on the bullish side, if we were to break below that line, that's when I would recommend stopping out of the trade. So as soon as this candle closed above this yellow line right in here, I would have closed any short position I had taken from either this red or this golden line, targeting this green line down here. I find that once you get too far away from that green line, which is past this yellow line in my example, that the target is way less likely to actually be hit. Now it's still possible that we go down to this green line here. However, I wouldn't draw it in based just on this Fibonacci retracement pull. I'm going to remove this one from my chart and not add anything from this pull. So let's see if we can add some simple geometry on this now. The first thing I'm going to start with are just basic trend lines. I'm going to click at the top peak here and connect it to this peak inside of here and just pull a trend line here. And then I'll do the same on the bottom with these peaks inside of here. So maybe something like this and pull that sideways. We could also take a look at something from these lows in here and see what that would look like. It's a little bit further downwards. I actually like the other one a bit better. I would keep playing around with some of these, and maybe if I even pull this sideways a bit, I can try and connect the lows from in here, see if we can connect some of this a little bit better. Not so much. I like the other one better, so I'll go back to that, and I'll just line it up like this. In general, we're trading inside of this triangle here, and in order to have a significant push either downwards or upwards, we're going to have to break out of this triangle and break out strongly. You can see that the two trend lines of this triangle meet around end of day on December 17th. So sometime in this upcoming week, I do think this triangle will break and we'll start heading in one of the two directions on Palantir. Now so far, both of our targets are upwards and our Fibonacci retracements are targeting upwards. So that is my current bias, is that Palantir would be bullish based on what we have so far. The very last thing I'm going to do is throw some pitchforks on my chart. This is just another geometry tool and it's one of my favorites. In order to use a pitchfork, you'll select it on TradingView and then you have to click on 3 pivots for this. I'm going to use the very low down here, the next peak we have in here, and then the next low we have inside of here as my first pitchfork pull. Now you can see so far that this pitchfork really hasn't done anything significant. We don't have much inside of it, and we're on the shift variation right now. I'll start playing around with different variations. I actually like the original one even less. We've already broken below this lower parallel line here. So maybe this shift one will end up coming into play. Maybe we'll head upwards to this median line right here, right where the triangle meets it, and then we'll break out upwards into this next box at the top of the parallel line here. However, so far there's not much conviction for this pitchfork, and our goal with using these pitchforks is to find what looks good right now and expect that same pitchfork to frame the market going forwards. So for now, I'm going to just hide this pitchfork and let's look for a different one. So let's try a pitchfork on the bearish side here. Even though so far everything is pointing upwards, let's see what those pitchforks might look like. I'll click at the very top, and then our next low as we were just using, and our next high as we were just using before. For now, I'm going to hide that triangle so you can see the pitchfork a little bit better in here. And you can see how significant this pitchfork actually is. Price has come down twice and bounced off of this median line in here. And also our first move down came to that dotted blue line right there, where we had support on it for a bit before the wick below, and then finally the breakdown to our median line. And when we headed back upwards, this blue dotted line was good resistance in here, through here, and maybe once again as we're coming up to it right now. This pitchfork is actually framing our current move extremely well, and this is one I would keep on my chart or keep ready to look at. Once again, for now, I'm going to just hide this pitchfork and see if I can find maybe one more good one. So after playing around with it a bit, I think I found a pitchfork that I really like to predict a bullish move in the market. I've used a pivot down in here around this $9 range, which is kind of the last spot that we were down in this $9 range after bouncing off it a few times before our uptrend really happened. And then after that, I've clicked on our all-time highs and the low right after that. You can see once again, this blue dotted line was the very first point of resistance on our push upwards here. And then as we came to the median line, it was an extremely strong resistance, pushed us back down to the blue dotted line quickly. Just zooming in so you can see that a little bit better. Resistance here, resistance as we started to push through, resistance at our median line, supporting the blue dotted line, first bounce down, broke through it, and headed back down to this lower parallel line of the pitchfork. So we have a few different things that we're looking at on this chart. Let's put them all back on for now and see if we can get any sort of confidence on which one we think is going to be most correct or most likely. So just with our two pitchforks on, you can kind of see that our price is bouncing between the two median lines of them. As we headed upwards, we hit the median line of this pitchfork headed upwards, and once we pushed downwards, the downwards trending pitchfork caught the price down here. If price were to continue staying in both of these pitchforks, which would mean we head upwards around right in here, this would be a significant pivot point where it would have to choose to stay either inside of our bullish pitchfork or our bearish pitchfork. And now if we put those trend lines back on once again, you can see that that actually lines up almost perfectly with our triangle here, which is expecting a breakout just one day earlier, or maybe even in the after hour market, the day before opening of where these pitchforks would have to break. So let's draw a box around this projected spot that we're going to for sure break out one way or the other, and then we'll go back to hiding our pitchforks on our chart again, until we get conviction that we're headed either downwards or upwards by the breakout of this triangle or the breakout of these pitchforks or both of them. We don't really know which pitchfork is going to be significant. So this is how I'll leave my chart, and I'm going to be playing this very patiently. I'll wait to see if we can break down below this triangle with strong volume and a strong candle, or if we can break above it with the same thing. Once that happens, I'll definitely be looking for a trade in one of the two directions. Now, if you've watched this video to this whole point and you've seen me come to the conclusion that I don't really have conviction one way or the other, that's got to be a bit frustrating. However, we'll definitely have an answer in the next few days. And what I'll say now is that I'm leaning towards a bullish bias on this, due to our Fibonacci retracement pulls that we see before, that are both targeting upwards values of either $33 to $34 or all the way up in the $39 range. I do think that's what we're going to see here in Palantir. That sometime in the next few days, we'll break out of that lower pitchfork, we'll break out of this triangle, and we'll start heading upwards pretty strongly towards these two targets that I have. All that being said, I think it could actually be a very good long entry in Palantir sometime very, very soon, or even right now. If you were to take a long position where we're sitting right now, you could have your stop loss below this triangle and maybe even below these wicks in here, just to be super safe with it. So maybe right below there, around an 8% stop, and then targeting up here as our first target, giving you about a 22% profit on the first target, or all the way upwards of here, giving you somewhere in the 40 to 45% target on your second play here. If this risk and this risk to reward ratio is something you're comfortable taking, this is not a bad trade at all. And if you're trading options like I am, maybe looking a few weeks out, end of December or early January, for $33 to $40 calls, somewhere in that range, could end up paying very nicely. If you're currently learning how to trade options or you want to learn how to trade options, I have a Discord that teaches people exactly how to do this, showing our trades every single day and working with our members, answering all their questions and helping them become better traders. If you want to join, there's a link to that in the description below. So if you made it this far in the video, first off, thank you for watching, and I hope you really enjoyed this content and got something out of it. And if you did, please consider clicking the like button below and clicking subscribe for future similar content. I really appreciate all of your support, and I think that you'll like some of the other content I'm putting out too, as it's all very similar to this. And with that, as always, good luck trading.